NFTs right now are the only thing that I've ever come across in my business career where the answer is yes. And what I mean by that is I often hear the question, can that be done via an NFT? And the answer quite simply is yes. It's just limited by your creativity. The only difference between third world nations and developed countries is proof of ownership. And so for this to be a vehicle that can offer proof of ownership, you're not clearing title in 30, 60, or 90 days, you're doing it instantaneously.
What's really popping up everywhere are these like one-off ideas. For example, You're in Finance was an idea about you deposit the money, we create the strategies, and we pay you the yield. It's kind of like a decentralized hedge fund if you think about it. And this would never happen in the traditional finance or traditional startup world. What's going to happen is the need for banking or the need for a stock market or a need for mortgages or credit is eventually going to start dwindling because these networks are going to come up with these ideas and it's going to start replacing them.
Welcome to episode 6 of Crypto Revealed. Boy, we keep building momentum here and we've got a great lineup for you here today. Lots of content that's going to have impact on your thinking and understanding so that you can be a more skilled and expert investor or maybe even trader when it comes to cryptocurrency. The views that the people present here are important to understand. These are experts. These are people who've spent years studying this, learning it, putting their own money into it, or maybe spending time cautioning other people about what they shouldn't be doing in this world. That's why we're here. This is a real educational journey, but it has real-world practical implications. Further, I will just also reiterate that during the free viewing period, which we're in right now, you can buy and own this series at a significant discount. We have a variety of packages. You can find the one that's right for you. You can invest, and then you can have this at your fingertips on demand whenever you want it. And not only that, we also have a lot of great bonuses that we've added that we think enhance the value of what you're going to be getting in significant ways. So we're still in the free viewing period. Discounts are here, but we're in episode 6 and 9, so we're starting to move toward the end of it. Now's the time to really start thinking about this if you haven't already. And if you have invested already, I just want to say thanks so much. It really means a lot to us as far as being able to do this work, to go out into the world and share this freely to anybody in the world. But for the people who bother to invest, own it, and support us, it helps us to keep going. And we love doing the work that we're doing. We love being here with you right now. So let's dive into episode 6 and learn more. My next interview with Eric Lepallier is something that cleared up one of the most confusing aspects of this whole cryptocurrency blockchain world. These things called NFTs, you might have heard of NFTs, stands for non-fungible tokens. And people would talk about them, they trade them, they talk about this art that's created, and they trade these NFTs, and they do it on the backbone of things like Ethereum and blah, 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 and all of a sudden your head is spinning saying, what are they talking about? I don't understand it. So I kind of marginalized and said, that's sort of like this wild, wild west. It's not really well defined. I don't know if it has much of a future, until Eric came in and sat down, and then Eric explained it. And he said, we're in the early stages of something that is huge. It's monumental, that NFTs are a big deal, and it is required that we understand them if we want to go play in the big game. So I am excited for this interview. It's one of those interviews that I'll watch probably 2, 3, 4 times so that it really sink in. He's an expert here, And it's funny, you'll see a story as to how he got here and started to really focus in the world of NFTs. And by the time he was done explaining it, it made a lot of sense. At least it did to me, and I hope it does to you. Let's jump into this interview. Erica, thanks so much for coming in and having this conversation with me. I'm looking forward to digging into the things you know about.
Oh, absolutely. Thank you so much for having me today.
Sure. So let's just start with your background. I know you've got a lot of entrepreneurial experience, but go back to the beginning. Kind of, how did you become an entrepreneur? What kind of work were you doing, and what got you into the stuff you're doing today?
Well, my corporate career was spent in broadcasting primarily. So I worked for a company that owned a bunch of CBS affiliates. And I worked specifically in liaison between CBS and the local affiliate level, how best to maximize their assets, primarily around sports, but then some of their primetime lineup as well. That took me to a company called Mediacom, and I had a very similar role where I worked with networks, but in this case it was ESPN, HDTV, CNN, Fox, etc. And I applied for an SVP position that I didn't get. And I kind of played the tape forward of what that looked like for the next 15, 20 years. I was certainly happy, but I would never have the real say or ownership of what I was doing and where my efforts were leading me. And so I went and had a very uncomfortable conversation with my wife that I was going to leave a very lucrative job that we were comfortable in, and I was going to go out and start my own advertising agency. I was very fortunate. This was not the ideal time to start something. It was 2008.
Oh boy.
But lo and behold, we got a lot of traction. And we very quickly were able to grow that from myself to 26 employees, win some incredibly attractive and marquee style business, and the rest was history. And that's just taken me on a springboard journey. I bought and sold many advertising agencies, and the ad world to me is fascinating because you get to play in a lot of different sandboxes. You know, it's not one product or service that you're offering. You really get to look at everything. And I quickly realized that if I had a business superpower, it's that I could very easily ascertain people's business models and then see that 2mm shift that could help them really open up the business. Could be new revenue silos. It could be the opportunity for partnerships that they hadn't looked at. And it took me to some wonderful places. And I've been very, very fortunate that I've never gone back to that corporate career.
Good for you. And then investment became a part of your business activities?
Absolutely. So early on, that was really just writing a check and being a passive investor in things that I was attracted in and attracted to. But that ultimately led me to more of an advisory position where I was able to not only inject a capital, but then also my own expertise, and more importantly, my relationships. Because, you know, it's a cliche, but it's a cliche for a reason. Your network is your net worth. And so I realized that I had some relationships that people would be very fortunate to have, and I was able to foster and grow those and bring those in as collaboration partners. There's a book out right now by Dan Sullivan called Who Not How, and spoiler alert, the whole idea of it is it's about finding the right execution partners, the right people who can collaborate with you. Don't worry so much about building it internally in your own teams, but find those subject matter experts or those people who are already doing it at a really high level. And that's what I feel like I've been doing for the last 15 or 20 years, is bringing those right people together.
So how did all this lead you into the world of cryptocurrency and NFTs?
Well, crypto's a longer story. I had some very good friends 6, 7, even 8 years ago who started talking to me about this weird stuff called, Bitcoin, and that everything was going to go away from a US dollar or fiat currency. And I said, yeah, that sounds good, but I've got this other stuff going on. So I put a little in. They put a lot in. Their lives have been fundamentally altered and changed, and they're, often living in $20 million beachfront homes or flying their private jets. And not that that's the goal of doing any of this, but it really opened my eyes that there was an opportunity, and I missed it. Just quite frankly, I didn't go in. I didn't push my chips in the way that I felt that I should. And so as I saw about a year and a half ago, NFTs really start to proliferate in the market, and these splashy numbers were starting to come across. I mean, the Beeple $69 million number at Christie's comes to mind. It definitely got my attention. And so I quickly said, this is the opportunity. And for me, NFTs right now, I put it this way for people who don't know. The internet was to websites what crypto will be to NFTs. And so I don't know how old you, my hallucination is we're a similar age. So the internet was like this weird thing in the 90s, and you heard about it and everybody said, oh, you need a website. And this guy Bezos was talking about selling books, and then I heard other people saying everyone will have a website. Well, lo and behold, everyone has a website now. And so you heard these conversations around crypto, how massively disruptive it would be to currencies. And I still believe that that will probably play out. But the really disruptive aspect is this idea of digital provenance that you can attain through an NFT.
So let's start from the beginning. What is an NFT?
Oh, well, sure. It stands for non-fungible token, but really that's like, I think that's a placeholder name. It's not very sexy. I can't imagine that's going to be the name that really sticks. But what it is, it's a digital proof of ownership. And that can be tethered to a digital asset or a physical asset as well.
Can you give us some examples of each?
Oh, sure. So a digital asset could be, it could be what you're seeing traded right now, which are sometimes art pieces, sometimes music pieces. I referenced the Beeple piece. That was actually a culmination of, I think, 5,000 days of his work. He had curated and produced individual pieces that he put into a montage and then sold it off. So those would be kind of the art, what's currently going on.
Well, since that's an extreme example, let's dig into that one a little bit. So an artist creates this digital piece of artwork, and it's one of a kind, right? It's not like they're going to just, well, that's
yeah, not necessarily. So you can do different iterations. So sometimes there'll be limited runs. So let's say it could be an artist and they do a run of 10 or 100 or 1,000. Right now, the NFT market is seeing an explosion of what are called community-driven drops. Most prominent in that space would probably be the Bored Apes Yacht Club. I am not making up these names. That's really what it's called. And they've exploded on the market. I mean, originally they were $300, and now their minimum selling price is mid 6 digits.
Real, and this is a piece of digital art?
This is a piece of digital art.
Now, since it's digital, what prevents somebody else from just making a quick little copy of it, or what protects it?
So again, it goes back to the blockchain. So it's actually tied to a individual piece that's on the blockchain, and you can have proof of ownership. So you can see which wallet has owned it over time, where it's been, where it's currently being held. And what's happened is it's caught a moment in popular culture. And so you've seen popular celebrities and sports athletes. Most recently, Steph Curry of the Golden State Warriors bought one. It doubled the market value in these NFTs overnight.
Wow. And that's the interesting thing, because of the blockchain, proof of ownership and forgery becomes kind of impossible, right? Because of how it's protected as compared to the regular art world. So that's kind of a little bit of a new twist on it. But now so that's a digital example. But how does an NFT work with a piece of art that's maybe not a digital piece of art?
Well, sure. There's a number of ways that you could do that. I mean, you could embed an RFID chip and have a digital reader to be able to prove that. You could use a QR code. You could use any number of things. NFTs right now are the only thing that I've ever come across in my business career where the answer is yes. And what I mean by that is I often hear the question, can that be done via an NFT? And the answer quite simply is yes. It's just limited by your creativity. And I've never seen a vehicle or a product that could really be that universal in its application. And at its core, you just talked about forgery. That's the real thing, because the only difference between third world nations and developed countries is proof of ownership. And so for this to be a vehicle that can offer proof of ownership instantaneously, imagine how disruptive that can be. So we were chatting before we started filming. You're buying a property right now, and you were talking about going through title and that some things weren't signed and kind of a cumbersome process.
Right.
look at a scenario where that could be transacted in an NFT. You're not clearing title in 30, 60, or 90 days. You're doing it instantaneously. So the use case could be massively disruptive.
So NFTs aren't just art, but literally the idea of an NFT can apply to smart contracts and these types of things?
It really is just a smart contract. I mean, that's what an NFT is. It's a smart contract tied to the blockchain that allows proof of ownership. It also allows a trailing royalty system for the originator. So
talk about that.
Well, let's look at, I talked about the Golden State Warriors. So that's an NBA team. Many professional sports franchises, when they sell into a new stadium, they sell what are called personal seat licenses or PSLs. And these will be significant investments on the front end, but more importantly, they're often traded in a secondary market, sometimes for a pretty handsome multiple. Well, once the team sells it to me and I go sell it on to the next person down the road, the team doesn't participate in that. If it was done via an NFT, they'd have an opportunity to have a trailing royalty system.
Wow.
So that's not only for PSLs, that could be for tickets, because, a hot ticket or, the marquee matchup can often go for many times face value. So this also would give them an opportunity, if it was done via an NFT, to do just that. But let's play that tape forward a little bit and look at how that could be applied to, and is already being applied to, the music industry. One of the most convoluted systems in the world. I don't know how much you know about the music business, but often there's a lot of acrimony around what's been produced and what's really been sold and where the listenership is. This eliminates all that, and it gives a platform that really levels the playing field for the creator, for that artist, to participate in the royalty in a very accurate way.
Well, and that's interesting, because the music business is one that's challenged right now, and I come from the classic rock era, so the very much vinyl pre-internet experience. And actually spent some time on the road with Fleetwood Mac, so kind of looking at the inside of the industry from a classic rock band, and then seeing through time how if these bands who made it really big, in let's call it the pre-internet and the pre-streaming era, now if they were starting out, it would be like, boy, Rockstar and Rockstar money probably wouldn't be on the table for most of them, because of the way that you're producing music now, but it gets streamed. You're not really selling albums anymore. That whole thing kind of goes away. And I think it's an industry looking for a better model to say, how do we get artists paid for the work they do and make it somehow fair in the exchange? So you're saying NFTs can disrupt where the music industry is right now?
I think so. I mean, you look at one of the biggest channels for the music industry right now, it's actually TikTok. And so if you look at that we're consuming media, we're consuming everything in a way that we could have never possibly imagined a few years ago. I think it just leaves it all ripe to disruption. So absolutely, I think that there's a very solid use case, and I'm actually working with a couple of prominent labels on how to best roll out their NFT strategies going forward.
And that's where a trailing royalty might occur. Where
absolutely. The funny thing about NFTs is, shockingly, I'm considered a subject matter expert, and I feel like I know this much. Like, I'm drinking from a fire hose every single day, because the landscape is changing every single day. We're really at what I would call the finger painting stage of NFTs, or the very first, pitches of the very first inning of the game. And so where we'll ultimately go with that, I can't tell you. I will tell you that I firmly believe within the next, say, 18 to 24 months, there'll be a platform that has 100 million plus users on it, and 97.5% of those users have no earthly clue what they're transacting in is crypto, and what they're actually buying and selling or trading are NFTs.
Wow. So if somebody like you, who to me is a subject matter expert, is talking to somebody like me who has a very abstract understanding of NFTs, but certainly I'd feel lost in the woods if I had to take any action on it. How does one approach this and say, well, okay, is there investment pools? Are there like funds that invest in NFTs? I mean, if at this point I say, you know what, I think he's right. I think this is going to be a big part of the future. It's going to be very disruptive, and I want to take that ride, so to speak. And as you said, you felt like, well, you kind of missed it in crypto, although a lot of people think it's still going way, way up. But from those early stages when your friends bought in, as you described, you missed that particular ride, but this ride you don't want to miss. So now I'm saying, I think I want to be like him. I want to get on that train. How do you get on it?
Well, there are a couple different plays. You can actually still buy the underlying assets because the blockchains that they trade on, NFTs right now, Ethereum primarily. There's a project called Solana that's also doing an NFT marketplace and play. Algorand, I mean, you can go on and on. There are a lot of different blockchains that are currently supporting NFTs. I can't tell you which one's going to win. What I'm more interested in is some of the marketplaces that have developed. So the largest is one called OpenSea, founded by two incredibly bright young men, Devin and Alex. They're transacting billions of dollars a month in business and with a very small team. I think at last count, it was 57 people. Wow. So that's one way that you could look at if you had private equity resources. They just did a raise. There are a number of different platforms. There's one called Maker's Place that I really like, and it's led by Yash and his team members. They're out of San Francisco. There's one in Miami where I'm from called Eternity that's also very attractive. But there are dozens and dozens and dozens. So it's kind of the very early stages. And so for me, what's important is I'm putting out a number of very small investments across a really large number. It's kind of that traditional venture capital playbook of I expect 1 out of 10 to really succeed. I don't know who's going to win because what I see going forward is imagine a YouTube for NFTs or an eBay for NFTs. Open space is sort of that right now, but they could end up being the MySpace to Facebook. So I can't tell you that they'll ultimately win. But I will tell you if you're watching this, I would pay attention to the space. I would see how you could participate. And the easiest way to participate is find an NFT that you actually like, that either from an artistic standpoint speaks to you or that has utility that you like, and just purchase it.
What would be an example of utility that I like a seat at a basketball game? Or
it could be, or there's a project Gary Vaynerchuk has just done. He called it his V-Friends. And what it allowed for is not only the NFT, there were a number of different layers. At the base level, I think it was 3 years of a new event he was putting on called VCon. But then it also had other utility where I think there was an annual gift or quarterly gift that would be sent as a holder of the NFT, or dinners with him. I mean, any number of things. It gets back to what I said earlier. The answer is yes. If you hey, can I do that as an NFT? Yeah, could you actually do part of the property that you're buying as an NFT? Yes.
Oh, walk me through that. How would that work?
So
kind of like a timeshare, only with tokens?
Ostensibly. We wouldn't want to call it timeshare because that's no longer sexy and hip. We want the digital or the crypto version of it, but very much so. I mean, you're seeing this play out, this kind of communal, everything that we've ever held true to be like, oh, this is our asset and this is a fixed way to look at it, has been disrupted in the last several years. I own a car. Well, how do I make money off of that? You have Uber and Lyft now. I have a home that I don't always use. How do you make money off of that? Airbnb. And so you're seeing that played out more and more, and the less friction that we can have around it, I think the easier the adoption curve will become. And so NFTs as a usable and kind of user-friendly platform going forward, I think will really open the playbook on this shared economy as well.
So are there industries right now, or sections of industries that you think are going to be completely disrupted by NFTs in the near term? Like, for example, might something like an Airbnb, might NFTs suddenly start to kind of overshadow something like an Airbnb?
Potentially, but the one that I really see as kind of an archaic industry that could really use the disruption is the ticketing industry. I think that this is something that has been crying out for a better way, and this could very much provide for that. I can recall I've talked about the Warriors a few times now. It's because I'm from the Bay Area, and so I have a home in Washington, D.C. as well, and I bought very expensive tickets to go see the Warriors play the Wizards, and lo and behold, these tickets were fake. And so I, was quite upset, and ultimately I got my money back. But what I didn't get is the seat experience that I had wanted. And I had to go to the window and pay again for the pleasure of going in. So that could be eliminated if you transacted your tickets in an NFT. So that's just one. And then also, I think that there's a bit of a used car salesman mentality to that secondary market, especially when you deal with ticket brokers. It levels the playing field there.
What about private jets? Maybe will people take in, maybe, because they have fractional jet, that's an industry right now, and maybe people start to say, hey, you can have an NFT for a seat on a private jet that, somehow, I guess, can be ascribed to a certain usage, for that particular seat?
Seat or block of hours, absolutely. So again, any physical asset you could divide in a very, very creative way, and you're already seeing this. I'm going to blank on the name of the hedge fund manager, but he just sold his condo as an NFT in Manhattan, and so you're seeing these things start to become more and more visible. We're so early right now. That's the beautiful thing if someone's watching this program, is they may say, oh, I'm late, but they're not. NFTs are really going to take us to the next level. And it's a self-fulfilling prophecy for crypto, because as NFTs have more maturation and more saturation in the marketplace, it's going to make the use case for crypto more and more and more viable.
So the guy who sold the fund manager sold his condo in Manhattan on an NFT. So basically, does that mean that he took his title somehow and put it on a blockchain and then developed a token and then said, okay, you buy this and you own the condo, and that's how it would transact from that day forward into the future? How exactly does that work, to go from a non-NFT asset and then create an NFT out of it? Can you explain that process a little?
Sure. So everything you said is correct, except having to create a token, because you can just do it on an existing blockchain. So right now, most NFTs are being transacted on Ethereum. I love the Ethereum project. I love the team behind the project, but I will say there are some fundamental roadblocks to mass adoption with Ethereum. One of them being what's called the gas price, and that's the price that people have to pay to transact. And so when the blockchain becomes congested, gas prices rise, and rise very significantly. My wife was going to buy an NFT of a friend who just did a project, and the NFT itself was, I think, $300 or $400, but the gas fee was $120.
Oh, wow.
That doesn't make sense. There's a imbalance in that. And so right now, one of the reasons that some of these other blockchains are starting to see some adoption in the NFT space is, by comparison, they may be cents or $1 or $2.
Right.
And so one of the things that Ethereum is working on is their 2.0 version, which will give much, much more ability for scale on transactions on the blockchain.
So question, and this is, I've asked this question many times, and I don't know that I ever got an understandable answer.
So don't expect one out of me.
I say that only because, just to take you off the hook as I ask the question. But here's what I kind of don't understand about something like Ethereum. So say they charge a fee, as you described, the gas price, to get this transaction done, but where Ethereum isn't a company with a P&L that takes in income and then has expenses and has employees, or like a regular company where the Ethereum the Ethereum tokens would be equivalent to stock. Where does that money go when you're paying it?
Oh, sure. So it's a decentralized platform. So it's dispersed to the people who are actually proving out the transaction for you. Because what you have when you have the blockchain is you have, this block of information, and it's attached to a chain. And the longer the chain, theoretically, the more trustworthy it is. And so It's just the computing power that's on your computer, his computer, her computer, and so it's dispersed in that way.
So if I'm one of the people that's processing or my computer's processing for Ethereum, I'll actually receive money from them every time a transaction happens?
Yeah, so what you're doing is you're actually staking, and so for that staking activity, you're getting to participate in the transactions that happen.
Oh, because I do stake Ethereum, so basically that's how they're paying my interest.
Exactly. Exactly.
You're the first one to answer the question for me.
Yeah, so that's all staking it is allowing for leverage and lending in the ecosystem.
Right.
It's the same way that you're earning interest on dollars. Like Gary Gensler, I think yesterday talked about if you were lending it, that made it look like a security. And I would actually challenge that position because US dollars are not considered a security. They're a value instrument.
Right.
And I think that really is what cryptocurrency is. It's a value instrument. And when you look at the fact that every fiat currency at one point or another in the history of mankind has failed, I like to have a little diversification there. And so I, for one, really believe that it's a hedge.
Right.
I'm not saying that the yuan or the dollar is going to collapse tomorrow. I'm just saying it's always smart to have a backup plan or a second silo, a second potential pool of assets that you can draw from.
And when these, again, we'll go back to gas fees, are paid, it's determined by just the code in the program, right? There's not a person who's...
No. So it's determined by the activity at that point in time. So the more traffic, the higher the gas fees. So you'll actually, there are sites where you can look and see when gas fees theoretically would be lower. But when you get some of these very hot projects that come on, you'll see the gas fees spike. There was one that my friend Sean Kelly did. It was called Dino Chibi's, basketball playing dinosaurs, which I believe we all leaned in our life. A basketball playing dinosaur.
Right.
But my point in bringing that up is his pre-sale sold out in 40 seconds and his regular sale of 10,000 pieces sold out in 18 minutes. And when you get that level of concentrated activity on the blockchain, you're going to see these spikes in gas fees.
So here's something else that occurs to me in what you're saying, because we've interviewed some people who are very bearish on crypto in general, like Peter Schiff, for example, who's basically saying this is all going to zero, this is all nonsense, this is some kind of, but and I think a part of it is because of utility and just the structure, and there's no real value there. But with the prospect of NFTs and how this seems to be this burgeoning explosion of them. Now we're seeing, wow, that's going to become a part of our life in a very real way, already is, and growing more, which lends more, I guess I'd say, sustainability or sort of cements in, crypto, because NFTs are something that's going to be that are adopted by the community. Is that kind of a proper logic?
I think it is, and I have heard those pundits as well say, it's going to zero, or look at Jamie Dimon a few years ago, it's a fraud. Well, if it's a fraud, why is he hiring thousands of crypto traders now? So it's just, it's very peculiar. I think there are mixed emotions and mixed interests at play sometimes when you hear these people have these doomsday prediction around cryptocurrency. I will tell you, for my money, I believe that genie is out of the bottle. I don't think it's going away. I don't think there is going to be a day where Bitcoin, Ethereum, Solana, Cardano, whatever, go to zero. There will be massive fluctuation because it's a new ecosystem, it's a new environment. I can't tell you which one will win, but I will tell you there is a thirst out there for something different. The Bitcoin conference, we are in the middle of a pandemic. 50,000 people showed up to Miami to participate in that conference. 12 or 13,000 attended the actual conference, and then the sideline events and the ancillary events around that conference drew 50,000 people.
Wow.
So I think that there is some there,
and
and I think it's going to stay. If you look at some of the publications, if you look at some of the personalities that have come up around the space. So I'm thinking of David and his team at BTC Magazine. I'm thinking of an Anthony Pompliano, Pomp, who is one of the biggest Bitcoin evangelists that you will find in the market today. There's massive traction there. They're getting hundreds of thousands and millions of people to watch the information that they're putting out. I don't think that would be done and then just overnight disappear. I think that it may not be for certain demographics because they won't believe in it. I have a dear friend, she's an incredibly prominent Broadway producer. She's in her, I'm guessing, late 70s, early 80s. I have spent hours talking to her about cryptocurrency. She just won't do it. She just has that resistance. And I understand that, but if you look at the 15, 18, 20, 25-year-olds, they don't even question. They believe it and they believe in it automatically. And so if you look at that and you look at the fact that physical dollars that we hold in our pocket are becoming less and less, I think that it's very easy to say, oh, okay, we've got Cash App, we've got Venmo, we've got, these different platforms that are already transacting in digital dollars. That could be anything.
Yeah. So it's kind of fascinating, because it's, everybody who's got a position are very convincing in so many ways as far as, how they reason it out, et cetera. But as you start to get under the surface of the crypto world, you realize there's a lot more here than one might think. Like just this whole prospect of the universe of NFTs. It's like, wow, that's a spectacular aspect to this that people aren't really have their heads wrapped around yet. But that's why we're doing the series, is to say we need to have this conversation and to understand it. What's also interesting, what I'm finding right now, and you earlier referred to Steph Curry, that they're sort of market makers, meaning, an Elon Musk makes a tweet or a move, or Steph Curry buys an NFT, literally it can move the market significantly. So there seems to be a lot of emotion attached to it as well as, the fundamentals.
Well, let's be real. Emotions have driven markets for thousands of years and will continue to do so. Digital, physical, every bit of it. I recall not that long ago, Bill Ackerman being on CNBC saying the sky was falling, and that was the day that he was covering his own shorts. So talk about having mixed, loyalties there. I think that we always use emotion because we're emotional beasts.
Right.
We're going to be driven by that, and I do see that right now there are people in the market that will drive those transactions or drive those projects because people want to be like other people. They want to say, I'm with him, I'm with her, I'm with they, I'm with whoever, because they feel like it's a tribe mentality, that by being part of that, I'm part of the cool club. A couple of months ago, I was on Clubhouse where a lot of activity around NFTs and the conversations were happening. I don't know so much now, but certainly early on. And getting back to that Bored Apes Yacht Club project, I heard a gentleman say, with all sincerity, that he identified with his ape. In the real world, he identified with it as a digital asset. There is a meaningful connection being forged here. And we've seen this sort of activity, we've seen this sort of behavior pattern. I remember, 20 years ago, Beanie Babies were this huge phenomenon, made, the founder a billionaire. People were identifying with these little stuffed creatures. And so we're seeing that kind of psychology play out again, where people want just something different, something, that's outside of themselves.
Right.
And I think this unique moment in time where we were, removed from human interaction just allowed for people to identify even more so on some of these projects. And so it doesn't take that many people to then create a movement.
And the movement's definitely there. And now, and again, the question is it a fad, or is it something that's here to stay? And I think by all accounts, and what you're saying and looking at the movement's growing, not shrinking.
Absolutely.
And that's for sure. And what's happening with fiat currencies around the world is getting more and more disturbing. And so I think you start to think through this, and you can see that maybe this is not only here to stay, but maybe holds some promise to help fix some of the problems we have as far as the way our economies have been run. Anything that you think somebody should know, or like, okay, you got an audience now listening to you. We've had this conversation. Final thought for them. They're listening. They're tuning in. They have an interest. What would you like to say to them? What's the final thought?
Well, let me touch on what you just said, though, about the currencies around the world. You saw El Salvador just recently adopt Bitcoin. You've seen other national movements around cryptocurrency. You see a country like Nigeria where they lead the world in Bitcoin transactions. I'm sure you probably know this, but the most predictable store of value the last decade plus in the continent of Africa has been prepaid mobile minutes, and it's transacted as a currency because it has some stability, it has utility, and it's not going to be fluctuating at 30, 40, 150% in a day or a week, and so you can have some certainty around the value of that.
And a minute's a minute, so it's backed by something.
Exactly, exactly. So, I think we're going to see more of these things play out, and I think it's not so much as a fiat versus crypto, it's how these two ecosystems begin to merge and kind of blend, and you're seeing it start to happen. You're seeing where there are fiat on-ramps to cryptocurrency and crypto off-ramps back into fiat, and removing the friction points. I think that's really going to see that's going to be the point where you see mass adoption, is where those friction points really become non-existent. As far as a final thought, I would say just dive in. I don't know what that means for you. That could be an investment, that could be buying an NFT, that could be buying some tokens that you find attractive, but get knowledgeable, get curious around the space. I post on my social media all the time about NFTs and crypto, NFTs specifically, because I'm fascinated with the creativity that's going on there. And I think we're going to continue to see that play out. And so go out there, read, don't read one resource, find multiple resources, challenge yourself, challenge what you know, because I think once you start to peel back the layers of the onion, you will become fascinated just the way that I am, because it's really limitless. It's crazy right now, and if you get on the right project early enough, that's insane. I have some friends who bought, 3-4 apes early on, and now they're sitting on, $1 million in apes. In apes.
It's unbelievable. Apes. Digital apes.
Yeah, like not even real apes.
Not
like
even
that
real
might be something. Yeah, it's insane. I have other friends who bought the Gary Vee project, and it was selling, I think, for 6 to 9 to start, 6 to 9,000. 3 ETH at the time, so let's call it 9,000. The floor price on these things is now $60,000, $70,000, $80,000. And that was 2 months ago, 3 months ago.
Wow. And but Gary doesn't realize the upside of that, does he?
Of course he does. So that's the beauty, is on the smart contract, you can put any percentage you want. The beautiful thing is Gary is actually participating in those secondary transactions.
Because he's got the trailing royalty?
He's got the trailing royalty. And so that creates an incentive to continue to promote the project, for one thing, but also to participate in it. Because how many times have you read that this master artist has died broken, penniless? And even in their lifetime, as their work started to achieve some significant numbers, this would give some sort of trailing royalty, trailing pension, whatever you want to term it as, in perpetuity.
Wow. So if I want to go, I want to get my feet wet here, so I'm probably not going to make a huge investment, but I want to go buy an NFT. Where's a place to go to say, here's all the offers that are kind of available, or do you just have to hear about them?
No. OpenSea is really, it is the eBay or YouTube of the ecosystem currently. So that's the best place where you're going to get exposure to most of the projects that are happening. But a lot of this activity is taking place on Twitter, on Discord, on some of these social media platforms. So get out there and do your homework, do your due diligence, and start to follow some of these handles. And you will quickly see that this is an evolving and rapidly progressing space.
Wow.
Yeah.
Beautiful.
There are major corporations that you're seeing do projects currently. I think of Coke that rolled out an NFT, and it was mainly artwork that they did. They quickly sold out. But I think the reason that they do something like that is so they can test it out on other business utilization. So how could we do it with our suppliers or our bottlers, where it removes any sort of doubt in the equation? It's all digitally transacted, and it's no longer I'm trusting your word or his word. It's just it's a level playing field on the blockchain.
Well, this becomes fascinating because if you have a traditional business like Coke, very long time established brand, right? And now they can literally increase revenues with new offerings for NFTs.
Absolutely.
And so, I mean, they got to be seeing this as huge opportunity to kind of enter this space, because one of the challenges, of course, from an old world, if you will, brand is how they become relevant into the new world, and maybe this is their vehicle.
Look at what Nike just did. I was fascinated with this project. They rolled out digital NFTs that were digital sneakers that then you could have them produce real world assets. So I buy an NFT that's a digital sneaker. I then can have Nike produce the physical sneaker. I can limit the number of that. And then the more interesting thing to me is I have a sneaker that I like, a digital sneaker. You happen to own one as well. We can actually marry those and have a digital sneaker that's a derivative of the two.
They have a child?
A digital, baby. There's actually a horse racing game that is doing that, where it's horse racing via NFTs, and you can breed your NFTs to create other NFTs. Again, it gets back to creativity.
That is, I mean, that's and that is really creative. And now, would I get a royalty on my Nike sneaker if they produce it?
100%.
Wow.
100%. And Nike would participate as well. So you're incentivized across the board.
That is, I mean, now I see how you're saying it's limitless. I mean, all the places you could go, how through probably some sort of AI and chaos theory, you can probably program things to have these digital horses have babies that perform at certain levels, and that could all, and then which ones because horse breeding is a huge business, right? And somebody wins the Kentucky Derby, which I was at recently, and now that one, their siring fees, to have that horse breed go way up.
Sure.
So you could do that digitally too, and kind of create a artificial nature that would, randomly, certain horses are going to just perform better, based on their lineage. I mean, anyway, this. Now I'm starting to see why your brain's exploding, because as you're explaining it, mine's starting to explode.
It's a fun space. It's a great time to be around it. And for anyone watching out there, my closing words are: get curious. Just get curious about it.
It's and that's where you're only limited by your imagination. I guess that's the limitless aspect of it. And I really like the advice of saying dive in, because it's one thing to think about this abstractly, in the sense of saying, try to get an understanding. But it's another thing that once you actually are in it, you've made a transaction, now you've got that experience. I think is really important to try to get things moving. I know it was for me, the difference between looking at crypto before I actually invested in crypto. It's like, now that I own it, it's like, oh, I get it now, where I didn't get it before. Even though I had this abstract intellectual understanding, there's nothing like diving in and doing it.
Absolutely. I actually, not that long ago, I had to physically take a friend's phone. We were going back and forth. She was looking. We've talked for a long time about crypto, and she's owned some other stable coins and Ethereum, but she had never done anything in Bitcoin. And I said, $50. $50, just so you start to pay attention to it.
Right.
I had to physically take her phone and buy $50 worth of Bitcoin. And I think she's done fine with it. I'm not worried about it. I'll pay her back the $50 if it ever does go to zero. But no, I think you're 100% right. You need to do something that gets you incentivized to pay attention to the space. And if anyone in the audience has questions, they can DM me on Instagram. It's Eric Helps, ERIK, Eric Helps, and I will do the best that I can. I don't always have the answers, but what I am, I'm thirsty for more knowledge.
Wow, that's awesome. Well, you might have your Instagram DMs blow up, but it's very generous of you to offer.
Well, you all have been very generous. I'm very fortunate to call the producers of this film friends, and I'm very, very happy to spend the time with you.
Well, it's been our privilege to have you here, and thanks for taking the time to come in studio, sit down, and share all this wisdom. I really appreciate it.
Outstanding. Thank you again.
That completes my interview with Eric Lepallier. NFTs, what do you think now? Something that could be meaningful for you? I don't know, but it'd be fun to go check it out and play with it a little bit. And I hope, based on Eric's interview, you'll do exactly that. Thanks for being here. I love really smart people, and Jeff Wang is a really smart person. When you look at his tech background and his work experience and his academic background, it's really impressive. And he's also taken some of the hits for us because there's things to learn on the risk side of cryptocurrency, and that's not all we talk about. And let me tell you, when you're someone who owns cryptocurrency and you get hacked, it's not fun. So you're going to learn from his experience, not only personally, but also his professional experience and what he understands around this world of blockchain and cryptocurrency and how it works. So let's jump into this interview with Jeff Wang. Jeff, excited to have this conversation. Thanks for making the time.
Yeah, thanks for having me.
So let's get into your background a bit as far as how you got to be doing what you're doing today. What led you here?
Yeah, it's a long story. I'll try to condense it. But I started as a technologist working for big companies like Cisco and Salesforce, moved on to a startup that does automation, works for a couple of crypto companies as well called Tonkin. We actually raised $50 million last week.
Congratulations.
Thank you. And then cryptocurrency has been more of like a kind of hobby, started as like an investment group talking about which cryptocurrencies to buy, started with Bitcoin and Ethereum, then realized Ethereum was making huge waves. The first real life use case was like fundraising. So in 2017, we got really tactical. We formed a group. We labeled ourselves Rocket Fuel. And then soon we started becoming quite famous in the whole industry. We had our logos on different events and different projects. And then I started writing a newsletter, just kind of making sure I didn't have all my research go to waste. And I'm still writing the newsletter. People still want to hear what I say. But really, I'm just a random guy that just likes crypto.
So since you're a technologist and you probably have the deeper understandings about crypto and maybe the mechanisms, how it works, maybe give us like the layperson's translation. What is cryptocurrency? Why should we be interested in it? And what do you think the future is going to be? So kind of go in that order.
Yeah, in terms of the technology, it's really a shared source of record. And up until this point, there was really no such thing as a server that nobody owned or a database that nobody could control. And that's essentially what Bitcoin was. It was this large table or Excel sheet that has people, you can use keys that can receive money or receive records, and only you can send it out of that record. So what's happens is a bunch of people are controlling all these servers, and people can interact with these servers that get printed across the whole network. So that's a little bit more technical, but to summarize, it's really a shared database that nobody really controls. And then the people that are supporting it are all getting rewarded for it. That's what we call mining.
So are different coins have different functionality? Like, okay, so that does mining. There's no real utility outside of that, except that it's sort of like, people agree that it has some value, and that's, that creates demand for it, and they limit supply through the mining process, I'd guess. Are there other types, like is Ethereum kind of based on a different premise, or for example?
Yeah, so Bitcoin, you could think of it as only the Excel sheet layer. It's only a ledger of who has what, and it gives the ability of people to send the funds. And really, the value is just determined by who thinks it has value, right? It's a buyer and seller's market, and crypto is extremely speculative. So there's not as many fundamentals as a company or a startup, right? Now, with Ethereum, they added a programmable layer, a logic layer on top. And the logic layer actually is completely Turing complete, meaning you could write a full-on computer application if you wanted to, but it's actually not very robust in terms of scale. Like I can't write Facebook on top of Ethereum without running into some problems with slow transfers and stuff. Mm-hmm. So what happened there is people thought about it. They said, okay, now I could write code on top of a blockchain. And the first use case that really caught on fire was creating other coins. So on top of Ethereum, you have your main protocol layer, that's the fee, like you need Ethereum to make transactions. But then people started creating other coins on top. And then these coins represented other startups. And pretty soon, all of these other mini startups started popping out of nowhere saying, hey, buy our coins. In the future, we'll offer some sort of great service, whether it's music, whether it's like NFTs, whether it's like ticketing or real estate. Doesn't matter. In the future, we promise it's going to be some crazy, awesome service. So what happens was like a gold rush. Everybody was like, oh, I can just grab all these coins. And then the moment they get listed onto an exchange, it pops up, right? So it became like a game, sort of like a VC game where you invest in a bunch of assets and hope one pops. But this was way more early stage, way more speculative, and things were just out of control multiple times in the last couple of years.
Yeah, and that's what I was just about to say. So it's sort of like these people are saying we hold some promise for a future that we're building on top of Ethereum, and therefore, so it's like a venture kind of play, or maybe even an angel play. It's a very early stage, as you said, highly speculative if they'll ever actually get that whatever it is to work. So from the investor standpoint, I'd be looking, and tell me if I'm right or wrong here, but I'd say, well, they all seem to be wanting to build on top of Ethereum. So Ethereum seems like it's got something that might have some substantive value with these other people coming on. Does Ethereum benefit when other people are building on top of their platform, on their layer?
Yeah, everything that happens on the pricing of Ethereum is completely based off demand and supply. And what happens is if I need to send a transaction, I need Ethereum, right? And if I need to create a coin, I need Ethereum to deploy the contract. So what happens is people start hoarding Ethereum. They start buying it up off the market. And that's where we saw the first spike to $1,000 back in 2017. And that just causes like a supply crunch, right? Because people need that to actually create stuff and write code and do stuff on Ethereum. And a lot of speculators came in too, right? People are like, well, Ethereum looks like it's doing well. I don't know why, but I better get in. And then you see these like giant demand influxes as well that cause these price fluctuations.
But if I'm the person who's using Ethereum, to build my own coin, that's going to be maybe doing something in music or any other things that you listed, am I paying Ethereum for that?
So there's not actually an Ethereum company, right? There's developers that have Ethereum, but what happens is it's completely decentralized. There is a network that you can deploy code to, and people are free to use that code. They can even copy the code. And in fact, it happens all the time. And then what happens is you can have a website where the record is stored on Ethereum. But when you see the interface, you're using your wallet to interact with it, whether that's trading coins, whether that's executing commands on the contract. It's like you're playing with a shared world computer that everybody treats as a source of truth. And then what happens now, though, is that it gets a little too clogged up. There's too many users on Ethereum, and the price of Ethereum transactions go up too. So at the peak of this whole bull run, it costs $300 to make a trade. So just $300 to make a trade is like kind of a big barrier to like newcomers, right? So what happened later is new networks popped up, same technology as Ethereum, but you could kind of migrate the coins to that next chain and then trade over there for cheap and then migrate the coins back on Ethereum. So we'll get to this probably later, but what formed was like a network of blockchains. So there's like the expensive Ethereum, and then there's all these networks and other apps that are cheaper to use.
Wow. So, the thing I think that's really hard to wrap one's head around is how do you try to assert or assess value here? Because I've come in and I just for disclosure, I own Bitcoin, I own Ethereum, and I own a couple other coins. I have I think a general understanding kind of it, but not. But I'm still kind of always saying, but where's the value actually happen? At what point does it say Ethereum is something that is here to stay, that has value, that, because as you're saying, it's out there, it's free, people can use it. There's now there's like some downside to it all. At what point do I finally say, but it all traces back to something that says there's a value here that is sustainable. Can you tell me what that is?
Yeah, so this is a great question. This is like the billion-dollar question. And right now it's all speculation. Mm-hmm. And if you looked at the charts, 2017, people saw Ethereum as a vehicle for fundraising. That actually became valued, right? I could buy Ethereum, send it across any other channel. It literally takes seconds to send Ethereum, millions of dollars even, right? Mm-hmm. And then the people on the other side can convert that to fiat or the local currency. So that was 2017's bull run. But then people kind of figured out all these services that are coming out have no value, right? Or at least they haven't proved value yet. There's no product market fit. And now 2018, 2019, you look at the price, it just keeps going down. And that's exactly the reason why there's no end goal or end state for Ethereum, right? But then in 2020, there was a use case. And what happened was a concept called automated market making, which means that I can deposit a coin that I generate on Ethereum into a pool. And then if I make another pool, I can trade across them. So what happened was everyone had this idea, I want to make a crypto exchange without any login. I want to make a crypto exchange without any emails or centralized governance. These liquidity pools became that. And that took 3 years to happen, right? So what happened in 2020 was billions of dollars of volume was being traded on Ethereum. And at some point, the exchange volumes of Ethereum, on Ethereum, the transactions itself, surpassed that of centralized exchanges. Right now, it's still centralized exchanges are winning now. But if you think about it, that was a service that was $1 billion industry, multi hundreds of millions of dollars of profit those exchanges were making, now got transferred to a completely decentralized network, a shared computer, right? So that was 2020, the reason why things started coming back. And then, of course, 2021, there's all these other reasons we can talk about later. But the point is, there needs to be some progress in the product market fit. Users have to want to use Ethereum or other crypto networks. Otherwise, what's the point of them, right? I can just mint a coin, I can sell it on an exchange, and then nothing happens. So that's the problem with 99% of the projects out there. But as you can see, with the automated market making, there was definitely users that wanted to use it. They wanted to buy Ethereum. They wanted to buy those tokens. They came onto the network and started trading, right? Mm-hmm. So that's what I would say is the value, is that there's progression in the technology, progression in use cases, and product market fit.
And how does the progression occur? Does it occur also in a decentralized way, or is there an Ethereum staff that continues to develop Ethereum?
This is really interesting. So there are some projects that are completely anonymized. You don't even know the developers. They just start deploying code. And it's a very unique, innovative concept. The code is all public, by the way, so you can audit it. You can find it out. They're trying to scam you. But what's really awesome is some of these developers don't even know who each other are. Mm. So they can pay each other with Ethereum or other tokens and then just deploy code. So you see all this code being written and being deployed on Ethereum. There is a core Ethereum core devs. There are people that contribute to multiple blockchains. But what's really popping up everywhere are these one-off ideas. For example, You're in Finance was an idea about you deposit the money, we create the strategies, and we pay you the yield. It's kind of like a decentralized hedge fund if you think about it. Mm-hmm. So that idea came out and a bunch of people cloned the code and copied it and jumped on. And some people are anonymous, some are not, right? Mm-hmm. So basically it is a free-for-all. It's a Wild West. People are coming on, deploying these ideas, testing these ideas. Some of these ideas completely collapse. And it's like an economic experiment each time one idea comes out. But it's so rapid. It's every few days, a new project comes out, people jump onto it, and the test of time on whether the coin can sustain the price or the project doesn't work at all is tested. And it's an amazing space. But obviously, as you say, it's all speculative. It's all still kind of coming out. And this would never happen in the traditional finance or traditional startup world. If a product doesn't even work, the company goes away, right? Or the company gets bad coverage. In crypto, you don't even know who these people are. So a project comes out, doesn't work. Okay, they move on. Another project comes out of nowhere, right?
Wow. So is there a future that you envision? I mean, with Bitcoin, for example, if I wanted to buy, well, up until recently, if I wanted to buy a Tesla, I could use my Bitcoin to buy a Tesla. But is there a future for goods and services being tradable with any of these coins? Do you think that's coming, or how do you see it?
I do think it's coming. Like El Salvador just announced that they're making Bitcoin legal tender on September 7th. But it's not a very compelling use case. It's just too simple for me. I think, I can create a source of record and I give you money. That's very, very simple. I think the true, really innovative use cases are still coming. And I think there's gonna be more complexities about how people interact with blockchains and decentralized networks. And they're gonna be just as powerful as today's applications. And what's gonna happen is the need for banking or the need for a stock market or a need for mortgages or credit is eventually going to start dwindling because these networks are going to come up with these ideas and it's going to start replacing it. So I just told you that developers could pay each other anonymously, right? There's no bank there. There's no ID there. The people don't even know each other, right? And these things are happening all over the networks right now.
Wow. So, and I guess when they're paying each other anonymously, they're still, I guess, referencing it to something like the dollar or some currency to say this is the value of what I'm paying you based on a fiat currency. So it's to me it becomes fascinating to think about how, supposing this really starts to move, and some applications really start to make this something that is much less speculative and much more real. Is this a threat to government currencies in the future? Does this pose a problem for governments that they have to try to figure out what to do?
It definitely does. If you look at what's happening in China right now, they're rolling out their own cryptocurrency. They've already piloted it for over a year. But what's happening is they need to make sure that the spotlight is not on other cryptocurrencies. So they've put a ban on Bitcoin mining. They've already half of the servers that are powering Bitcoin have been completely shut off already.
Wow.
And then they've also shut down some crypto exchanges. They've told financial institutions to stop dealing with crypto. This is like a war on crypto. Like China is saying, listen, we have a cryptocurrency. Don't use these other ones. They're not legitimate. They're like pushing out all this press for the first time ever that they're really being aggressive about this. They've banned Bitcoin 4 times now, but this time it looks more serious.
So when you say China rolls out their own cryptocurrency, but now suddenly this isn't a decentralized currency, right? I mean, this is something that they control. It's a government-controlled digital currency in essence, different than something like what Bitcoin would be. Is that accurate, or?
It is different in that they will have the transparency. They know where the coins are going, where they originated from. The one thing that's going to be the same is customer behavior. People are still going to use their mobile wallets, their phones to pay for things. In other states, United States, there's like credit cards and cash still. China's mainly converted to digital. But what's interesting to me is, let's say you're traveling to China and you want to use some cash locally. What do you have to do? Maybe you have to create a wallet on the Chinese blockchain and then register your ID there. And then basically they have complete visibility as to what you're doing, right? So that part, I'm not exactly sure how it's going to work out without getting people mad. But otherwise, it's behaviorally, that's a word, is going to be pretty similar. But China will have a little more control as to where the coins are going, what's the supply, and what was the path of how the transactions happen between different people.
Well, I was about to say, one of the problems with government-issued currency is how manipulated it all is, and how it's sort of, you look here, in the United States where they start to create stimulus, programs, trillions of dollars of, basically, currency being, figuratively, not literally speaking, printed out of midair. And, they can just manipulate the currency, right? They can inflate it. They can do all kinds of things to it. And I think one of the things about crypto is that, that can't happen. It can't be, it's a more non-manipulatable currency, But with what China is proposing with their own, I mean, could they do the same thing? They can just suddenly just issue more of it and, kind of manipulate the currency itself?
That's still to be determined. I think what makes crypto really compelling is the rules are set, right? The rules are visible to everybody. The inflation is fixed, and then eventually it dwindles down, right, over time for Bitcoin, for example. When you have a government-controlled cryptocurrency, we don't really know what the rules are going to be. So there's like possibilities for them to change the rules and mint extra tokens. But I think the difference here is it's extremely visible, very transparent as to what happens on the chain. And that's not the case with any other world currency, right? Like you can say there's a balance sheet, there's some coins here, but you don't really know exactly what the total supply is. You don't know where it's sitting. But with a blockchain, you can, right? Everything is completely pseudo-anonymous on the blockchain.
Got it. So in the case of China, is there cryptocurrency that they issued? Is that completely independent of their standard currency?
I think it's going to be the same. It'll be a digital one.
It's a digital one. Okay, so they're using even the same name then. Okay, interesting.
Actually, I think the official name is like CBDC, which is central bank digital currency. But that's not a very intuitive way to say it.
Definitely not. So in your own mind now, as you said earlier, crypto is very speculative. Do you feel that 99% of the coins are out there are going to just be gone at some point in the not too distant future, and there's going to be a couple of winners? Do you feel like the real winners haven't been even developed or offered yet? How are you seeing it?
I think that 99% will go away, but I think there's a place for multiple winners to happen. And the reason why I'm saying that is because I'm seeing a lot of cross-chain protocols now. So if, let's say, Ethereum is currently the most compelling in terms of number of developers, number of applications deployed, but there are other projects right now that are able to interact with Ethereum and by itself have better infrastructure for those use cases. So for example, Ethereum is actually very slow. You can't do that, hundreds of thousands of transactions per second, but other blockchains you can. So what I'm thinking is going to happen is there's going to be like a source of record on Ethereum, but that will carry over to other chains, and the other chains will serve a purpose. Maybe it is that fast-paced transaction. Maybe it is going to be like privatizing data. So like if there's personal data or you're transferring files or storage, that is going to be on another chain. But at the end of the day, what's going to happen is you're going to see like not an internet, but just a network of different decentralized networks. And those will become like, oh, I can interact with it on a web browser. I can interact with it on my phone. But it never touches a bank or an ID or anywhere that there's a centralized governance, right? So I think that's what the future state is going to be. And there's going to be several, not winners, but several like survivors, I would say, that actually go into production.
Yeah, because I guess in one sense you have to separate blockchain as a technology from crypto, as a currency. They're related, but not necessarily the same thing. Because I know that there are also Medici Ventures. I interviewed Patrick Byrne a while back, and also the president of Medici, where they were investing in blockchain technology for smart contracts for title to land. They said that they felt there's dead assets, about $100 trillion worth, that will come to life because of blockchain. And it's not somebody selling a coin, but it's these companies that are creating use of blockchain for varying things that can help bring, especially in places like Africa or India, bring kind of dead assets to life. Do you see it that way also, that there's this whole world of blockchain applications that's independent of a currency, so to speak?
Absolutely. I mean, currency is just one small portion of blockchain, right? We talked about decentralized finance with trading, borrowing and lending, credit. That's all happening as applications as well, completely independent of currency. It's a protocol that moves currency, but that protocol itself is a use case that's on blockchain. What you just described right now is closer to an NFT, right? I use blockchain as a source of truth as to who owns what, right? And what I've been really excited about are kind of like trading cards. So like NBA Top Shot, I don't know if you heard of that, just launched this year and wildly successful. They were minting playing cards on the blockchain. They're actually videos, and then you could go and buy them and then own them on the Flow blockchain. And this is really exciting because even non-crypto enthusiasts started jumping on board. right? And I'm pretty sure we're going to see like Pokemon cards and other sports teams jump on. And it's going to be another revolution of like, oh, there's this like cool, scarce asset and I'm going to buy it and it's going to be fun. Because those things already existed before crypto. We already had trading cards in the past, right? So that's another kind of use case. The NFT kind of stamping of ownership is definitely another non-crypto related use case.
So are these related to like, are these digital cards or is this actual cards that you basically, that they have a token or something that represents the card and you can buy that so that you know you own that card? It's just it's a mechanism for trading these commodities. Is that how it works?
I've seen both happen. So I've seen physical assets get stamped on the blockchain. I'm not as excited about that, by the way. I think the digital like asset on the blockchain itself, and then being able to trade that in a decentralized way, like offline, I can just sell you this trading card, right? And nobody has to know about it. That's kind of where I see things are going. And like the video digital trading card, that is sitting, like the stamp is sitting on the blockchain, but it's connected to a database that has like the videos, right? So there are like ways to connect kind of blockchain ownership into real life assets or digital assets. But the key component there is that you for sure have access to own that card and you have access to trade that card without the need of any central middleman.
Wow. So will this also carry forward? Let's say I own a Van Gogh or some multi-million-dollar painting, and I decide, I think I'll create a coin, that's backed by this asset, and then people can own a piece of a Van Gogh if they want. And if the value of the painting goes up, then the value of their investment goes up. Is that kind of a scenario something that might unfold also?
It's already happening. People are already selling tweets on Twitter, and then people are selling YouTube videos. People are selling some physical assets, not as much because it's harder to like figure out where to store it. Right. But that stamp of approval is like means you own it and you can sell that to somebody else. But again, it's not as compelling to me because I struggle to see the utility on some of the ownership of these assets. It's kind of like just making up ownership of some random thing and then jumping on board to make money on it. So I think the use case is there. But at some point, it's a little overused.
Yeah, well, because I guess what I'm saying is that it's almost like it creates a public market where before, one didn't exist. In other words, if I wanted to buy a Van Gogh, I had to go to a Christie's auction, and have enough money to purchase the whole thing. Whereas, boy, if I could, own a thousandth of one, and there multiple people do, it kind of allows, I guess, more public participation of assets like the Empire State Building or a painting or something like that. That I kind of thought about that, and so that would be kind of an interesting way for people for an owner to sell their asset to the public.
I'll take it one step further because in your use case, there's not much else utility other than ownership percentage. Mm-hmm. So when you think about distributions of revenue or royalties, that's where I think it's more compelling. So let's say you own a song. And then you own 50% of the song and 50% goes to the artist. I don't know. And then when anybody pays royalties to that song, it gets splits to both of you. And you can do that all on chain. Realty.co is doing this with housing. So they collect rental revenue and then you can buy a token on the Ethereum blockchain. And whatever percentage of the total tokens you own there, you get the distribution through that coin. And it doesn't matter who you are, as long as it's sitting on your wallet, you'll get that money coming to you. So I think that's like the next step of what you just described. It's like percent ownership, it's transferable, but I'm also collecting revenue or distributions through that ownership. And it's all decentralized. I don't have to know who's holding the token. I just know they own it. So I'm going to send them money, right?
I actually love that. But now I'm the government and I say, wait a minute, how do I tax that?
Like they're cracking down on fiat gateways. So ways to get from USD into Ethereum or Bitcoin, any gateway they're trying to crack down on. And also they're cracking down on wallets too. Wallets are just, by the way, a 46 digit random text. And then that can be converted to a public key. And that's your wallet. So anybody can create a wallet out of thin air, right? But government's looking for who owns this like key. Who is the person that owns this, right? They have no idea. It's just sitting on the blockchain. Everyone could see it. But that's something that they're probably going to try to go after as well.
Speaking of wallets, thanks for bringing those up. I wish I could be a fly in the wall what's going on inside of like some government conversations around what they're going to do with this stuff. Let's say that I have an account on a exchange, Coinbase, Kraken, what have you. Is it your recommendation or the standard recommendation that people should, buy whatever, they're going to offer this exchange, but they should be storing it on a wallet that's not on the exchange? Or do you think this exchanges are safe enough now just to, leave your stuff there?
So almost every exchange has gotten hacked. I don't think Coinbase has gotten hacked, but most of the major ones have gotten hacked. Some of them, they were able to recover the funds and not lose it for the customer. But I think that's the only reason in terms of if you're just a casual investor, because if you're not going to use the coins, you don't really need it on a wallet other than trying to protect your own assets. Right. The moment you take it off the exchange into your wallet, it is yours. Nobody can take it away from you, right? Unless they have your keys. But when we talk about like the Ethereum network and other decentralized apps, decentralized finance, you can use your wallet that has that Ethereum to interact with all these different apps. And you can't do that with Coinbase. Like once it's on the Coinbase exchange, it's there. It's not actively participating in anything.
Wow. Yeah. So then, because of course, we've heard the horror stories from, I think they're more years ago that, when these things got hacked, now people lost, a lot of their, whatever they were holding, like Bitcoin. But it seems like I think they're ratcheting up security quite a bit. But I was just wondering about the virtue of the wallet, and I think you just said it. So,
by the way, there are hacks like even off exchanges too. So even if you have it in your wallet and you interact with the protocol, that protocol might get hacked as well. Because all the code is public. So people are able to view it, find the exploits, find loopholes. Most of the loopholes now are what we call like price oracle. Like it's a flash loan that takes a price, manipulates a price somewhere else, and then does a transaction where it gets a better deal. But long story short, they're able to take funds out of different protocols because of the mismatch in prices. And that's happening once a week. Almost like wow. It is dangerous. It's still dangerous out there to take the money out and use it, or at least participate in networks. There's still things that are immature in the crypto space there too.
Yeah. So to somebody like me who isn't a technologist, this stuff becomes sort of almost like scary or overwhelming. Saying, okay, so what am I to do, so to speak? And I've got friends literally with over $100 million in crypto investment, and I look at them saying, how secure is all this? And they'll talk about their wallets and the encryption keys, and it can't be broken, et cetera. But then when I talk to people who have the deeper technological understandings, they say things like you just said, and I'm like, boy, that seems to be a bit risky. I don't know how risky, but a bit risky. And when you're going all in on crypto, like I know a lot of people have, I think the risk becomes, at least for me, intolerable. I guess everybody's psychology is different on that. Where are you on it? I mean, how much risk do you take in crypto as far as your own personal investments?
I usually just spread myself thin, whether it's wallets, hardware wallets, exchanges, investments. I just try to not to have too many eggs in one basket at any given time. I have been hacked multiple times. Sometimes it's with a protocol. So mainly like it's me depositing funds into a protocol that I want to learn, and then that gets hacked, right? That's happened more times than I can count probably, because I'm always just interacting with all these protocols, trying to learn them. So it's up to that person's risk appetite. If you want to hold it on one exchange, that exchange could get hacked. So maybe have two exchanges, and then maybe if one gets hacked, you only lost 50%, right? And then maybe you have like 10% on each thing, right? So if one thing gets hacked, it's okay. You still have 90% of your holdings. So that's my philosophy, is just to spread yourself thin. Obviously, the most secure is a hardware wallet. So a hardware wallet is like you need to push a button on the USB drive in order for a transaction to happen. That is like the probably most secure, but you could always lose that hardware wallet. Just remember, so be careful.
Yeah, and you can have, I think, multiple hardware wallets, if I'm not mistaken, like as backups, right? So if you lost one, you have a backup. So I guess that's kind of like where I think with people who are seriously invested, that's kind of what they end up doing.
At the end of the day, wallet is just a string of text. That's it, right? So you can have as many as you want.
So now, what's the future, do you think? If you were to take out your crystal ball and gaze into it a little bit, what do you think is happening in the next 2 to 3 years with crypto?
So right now, the main hurdles are scalability. So the number of transactions per second, and then the gas fees, right? So like the fees of using the crypto is really expensive. The second thing though is there's going to be networks designed for certain use cases. And what needs to happen is communication between these chains. So for example, in the next coming month, Cosmos is coming out with inter-blockchain communication protocol, meaning that within the network of blockchains on Cosmos, everything can talk to each other. It's a really impressive technology. And then I think that is going to extend to other chains. So the Terra Luna network is going to eventually communicate with that. And Terra Luna can already communicate with Ethereum. And then Ethereum can communicate with Matic and Binance Smart Chain. So all these chains are going to have something that they're good at. And they're all going to be able to talk to each other. So that's what I think is going to happen this year alone.
Okay.
Now, when we go to next year and even years beyond, I think what needs to happen is actual value being transferred on the chain. So we talked about NFTs, we talked about real life assets. There's another concept called synthetics. So if I can trade a stock on the blockchain and not need any account or like a Ameritrade or Scottrade account, that is what I think things are going as well. And it might not be stocks. It might be anything, right? It could be real estate. It can be NFTs, art, right? That is going to be where I think like actual value sits on the blockchain. And then right now we have all these coins being minted that don't really have value, but the protocols have value. The ideas have value. And that's really not enough, right? You actually need something that is being transacted that has value. So I think that's where we're going is like, we're going to solve the scalability. Then we solve the communication. Then we actually get real value onto the blockchain. And then you have a shared computer across the world that anybody can use. And that's like a very interesting kind of end game.
Is there going to be a lot more, I guess I call it maybe consumer-friendly applications, meaning that, for someone like you, who's got a extraordinary technological background, you can really navigate these waters. I mean, I was driving yesterday with my 7-year-old son talking about crypto, who he's got a keen interest in it. And I said, years ago, I was looking to buy a bunch of Bitcoin when Bitcoin was at $300. And I at that time owned a technology company. I'm not tech phobic at all. And I was literally looking at how difficult and complicated it was for me just to buy that Bitcoin at that point. And I wanted to do it just because I believed in the idea of a non-government controlled currency. I'm a libertarian in my disposition, so so as I saw this come out, I philosophically aligned. I said, I just want to buy a bunch of it just to support it because I believe it's a great idea. But then when I tried, and at that point especially, it seemed kind of cumbersome, complicated. I said, I can't see how anybody typically is going to be able to enter this arena. Of course, famous last words, I should have done it in hindsight, but that's hindsight. But now, I guess moving into the future, is it going to be something where virtually anybody can kind of enter this game, who's got a smartphone and kind of has basic working knowledge as compared to kind of where we are today in it?
Absolutely. So you can imagine this is kind of like the internet where you only had 28.8K modem, and the websites that are coming out, all they do is show ads. There's no actual business behind them, right? We're kind of in that phase now where we have all these ideas, we have the technology in place, but it's slow. You can't really deploy YouTube back in those days. Like you can't watch a video at that speed, right? So we're still in that phase where there's still product market discovery, product market fit. We're also looking for like maturity of like the security and the scams and other ordeals. But I think a lot of the kind of hesitation that you're feeling is the fear of like how immature the space is, right? We don't really see a product that's like extremely well created that everybody can use, that's simple, that has no faults. And I think that day is coming. So like it will eventually come. Now, I think the gap right now is jumping from the wallet into these different layers of applications. That there needs to be something like in between, like some centralized, which is like against the whole crypto philosophy, but some centralized gateway where using your device is automatically able to interact with these chains. And I think like Samsung and some other smartphones are actually thinking about that really hard. Like they store the blockchain wallet directly on the phone. And then when you open an app, then it automatically uses that on your phone. So I think that it's getting there. It's like step by step, the pieces will be in place. where you're not even thinking about it, but you're interacting with like this world computer that everyone's using.
Wow. Well, I have to say, Jeff, this has been extraordinarily informative and stimulating. I mean, you're very impressive with your depth of knowledge around so many of these issues and your ability to explain it. And I certainly learned a lot. So I really appreciate you taking the time to explain all this to us.
Yeah, thanks, man. Anytime.
Well, that completes my interview with Jeff Wang. I hope you really learned a lot from his personal and professional experience. It was great to share this with you. That completes episode 6. Man, you're doing a great job. Here you are. You're learning this stuff. I'm very impressed that you're here right now. There's a lot more to learn, but at this point, you're starting to see that this picture is starting to form and you're getting some understanding, and maybe you're thinking to yourself, you know, I can do this. I think I can do this. Maybe I have a little bit more to learn, but I'm starting to see the light here. I'm starting to understand what all this excitement and buzz has been about. And that's why I'm glad you're here right now at the end of episode 6, because we have more episodes coming up. This is a 9-part docu-series. I also want to remind you that you can own this series. There's a variety of packages, some great bonuses. Take a look if you haven't already and see the right one for you, and go ahead and make that investment with our deep gratitude for doing so. And if you happen to be someone of the many who have already invested in this series, just thank you. I really, really appreciate it. It means a lot to us. We just love doing the work, and we love being here with you. We love being able to release this to the world and let anybody see it during this free viewing period at no cost. But that work has to be supported, and that's what you're doing right now when you invest. You're supporting the work, but you're getting the benefit of the bonuses and the information. So it's a win-win. So thanks for being here. I'll see you in episode 7.
Every single product that your bank would offer, all of them are being replicated in a decentralized manner. And that is what we are super excited about, not being able to do things that we currently can do with the banking system, but new things that were never possible before. The nature of technology is that the rate of innovation that happens changes so quickly. It is a technology that you eventually have to learn. In being able to apply this technology in your business, in being able to apply some of the innovation that is happening, and that is super exciting.
If you don't own assets, you're going to have a problem in 5 or 10 years from now. Bitcoin is now a digital asset, and there's basically no barrier to entry because anyone can do it. Then you have a piece of a very scarce network that so far has only just continued to go up in value and will probably continue to do so. So educate yourself. What is Bitcoin? How does it work? Billions and billions of dollars that are being invested now to build the infrastructure and to make it easier will get easier and easier until you don't even realize that you're using it. And I think we're moving towards this digital economy, and digital money is basically a huge part of that.
The most disturbing thing of all is that the biggest banks and now government agencies like the IMF are deeply involved in developing cryptocurrency technology. The more I learned and still am learning on that, this is it. This is a cashless society. The digital currency is it. As some people call it, it's the mark of the beast.
Right.
Wait a minute. Did they trick us? The cryptocurrencies, the most popular ones, are dominated by banking interests, and they're not stupid.